What is What is up, everyone? Welcome to a massive live stream here on the Block Analyst. Bitcoin is at a historical crossroads right now, and I'm not here to give you just another basic update. We are witnessing a fundamental shift in market structure that could dictate the next 6 months of your portfolio. The price is acting strange, liquidity is shifting, and we are approaching a make or break zone that most retail traders are completely missing. Before we jump into the charts and start dissecting this movement, do me a huge favor. Smash that like button right now. Let's get this stream out to every trader who's feeling the heat today. And if you're new to the channel, hit subscribe and turn on those notifications. On this channel, we don't trade on hype, we trade on data and professional execution. Today, we are going to attack this Bitcoin analysis from multiple angles. I've prepared a massive toolkit for this session because one indicator is never enough to see the full picture. We are going deep, we are staying objective, and we are going to find where the smart money is hiding. Let's head over to the charts. All right, let's kick things off with the first heavy hitter in our toolkit today, the Ichimoku Kinko Hyo, or the Cloud. Now, look closely at this weekly time frame. For many, this might look like a standard dip, but for a professional analyst, this is a red alert. First, look at the price action. We have officially broken below the green cloud, or Kumo. In Ichimoku theory, the cloud represents our ultimate safety net. By losing this level, we have exited the bullish zone and entered the danger zone. But here is the most concerning part. Look at the future cloud. Notice how it's constricting. That thinning of the cloud tells us that the buying momentum has completely dried up. When the cloud pinches like this, it's preparing for a bearish flip to red. What used to be our floor of support is about to become a ceiling of heavy resistance. As long as we are trading under the cloud, every relief rally is just a dead cat bounce until proven otherwise. We are currently being suppressed by the conversion and baselines, and if we don't reclaim the $70,000 area immediately, the gravity of this cloud break is going to pull us down toward the $61,000 and $55,000 liquidity pockets. Now, let's zoom in. We've looked at the big picture on the weekly, but to understand why we are here, we have to look at the daily time frame. This is where the story gets intense. I want you guys to look at this peak right here, around the $115,000 mark. While the majority of the market was blinded by extreme greed and calling for 200K, that was our definitive exit signal. If you look at the price action back then, Bitcoin was showing massive exhaustion, and for us at the Block Analyst, it was time to step aside. But that's not all. I actually shared a specific video with you guys, which you can find right here on the channel, where I warned you that this drop was far from over. In that video, I told you exactly what was going to happen. Bitcoin was going to drop to $63,000 or even lower. And look at where we are now. The price has sliced through the daily cloud like a hot knife through butter, exactly as we anticipated. The white Chicago span has plummeted through the candles, confirming that the bears have taken total control of the steering wheel. This is why we follow the strategy. If you exited at $115,000 and heeded the warning about $63,000, you aren't sweating this volatility. You are sitting on cash, waiting for the perfect moment to strike while others are trapped in the red. As you can see today, the price is hovering near $69,000, struggling under a thick red ceiling of resistance. What? All right, team. All right, team, let's take a deep breath and look at the big picture. They say history doesn't repeat, but it often rhymes. We need to talk about the historical fractal, because what's happening right now is a mirror image of the 2022 market cycle. Look at these red circles on the chart. This is the MA7 crossing below the MA25. In technical terms, this is a death cross of short-term momentum. In 2022, when this happened, the market was in total denial. Everyone thought we would bounce. But look at the result, a minus 50% flush that wiped out billions in liquidations. Now, let's look at today. We've seen the exact same ATH distribution phase. The price pushed to $115,000. Whales started unloading their bags, and now the MA cross has confirmed. But there's a key level here that is even more critical, the MA99. Historically, the MA99 is the line in the sand. Once we lost the $73,000 support and dipped below the MA99, the structural integrity of this bull run was officially broken. If Bitcoin doesn't reclaim the $85,000 to $90,000 zone with massive volume in the next few candles, we're looking at a fast-track acceleration toward the $50,000 zone. This isn't FUD, this is data-driven reality. We are watching the rhythm of the market play out in real time. Now stay with me because this is where it gets interesting for those of you holding altcoins. While Bitcoin looks like it's following the 2022 script, the altcoin market is telling a completely different story. Back in 2022, alts had a lot of room to fall, but today, most altcoins are already sitting at levels of extreme despair. They have been bled out for months. When we look at the market caps of mid-cap and small-cap gems, they are at historically low levels. This is what we call the despair phase. This is when the average retail investor gives up and sells at a loss. But for the smart money, this is the accumulation zone. We're starting to see selective strength. Have you noticed how some alts are actually holding their ground while Bitcoin drops? That is capital rotation. Money is moving out of the shaky Bitcoin and into undervalued alts that have already priced in the worst-case scenario. This divergence is rare, but it's a sign that while the king might need to find a new floor at $50,000, the altcoin season might be preparing its foundation in the shadows. The future is still incredibly bright, but you have to be selective. You can't just buy anything anymore. You have to find the coins showing relative strength. I want to pause the charts for a second and talk directly to you guys in the chat. I'm reading your comments and I see the tension. I see some of you saying you've gone all in on alts out of frustration, and others are so paralyzed by fear that they've sold everything at the bottom. Listen to me closely. We are currently in the capitulation phase. This is the exact moment where the market tries to break your spirit. It's not just about the numbers on the screen, it's a psychological war. Let's run the stress test scenario together. Imagine Bitcoin actually hits that $50,000 target we discussed. If that happens, yes, your altcoins might take another 15 or 20% hit. It will hurt. But ask yourself this, if a coin is already down 90% from its peak, is that extra 10% drop a reason to quit, or is it the final discount before the generational bounce? This is where you differentiate yourself from retail and become a professional. Professionals don't have hope, they have mathematics. When we're at the point of maximum pain, where the headlines are screaming crypto is dead, that is historically where the greatest fortunes are built. You need diamond hands built on logic, not on emotions. I want to see the temperature of this room right now. Type accumulate in the chat if you are using this blood in the streets to build your long-term positions. Type waiting if you are staying on the sidelines until we reclaim the MA99. Be honest, there's no wrong answer, only different strategies. And while you're typing that, look at the like counter. We have thousands of people in this live session, but the likes don't reflect the quality of this community. Let's break the YouTube algorithm together. Smash that like button right now if you want me to keep going and reveal the specific altcoin rotation I'm watching. All right, everyone, let's get technical. Very technical. What we are looking at here is a classic textbook bearish flag. I want to spend a good amount of time on this because this pattern is the ultimate retail trap. Notice the structure. We have a massive, sharp drop. This is our flagpole. Then, instead of just crashing further, the price starts to crawl upwards in this tight ascending channel. This is the flag. To the untrained eye, this looks like a recovery. People start saying the bottom is in, or look, we're making higher highs. But for us at the Block Analyst, we know better. This upward movement is weak, it lacks volume, and it's simply a rest for the bears. A bearish flag is a continuation pattern, meaning the trend that existed before the flag is very likely to continue after it breaks. Now, let's talk about the math, because this is where we get our targets. As I told you in our previous session, and I want to remind you that we called this perfectly. Our first target was $63,000. How did we get that? By measuring the height of that aggressive flagpole. When Bitcoin broke the bottom support of this flag, the measured move was activated. We hit target 1, $63,000 with surgical precision. But as you can see, the momentum didn't stop there. We are now hunting for target 2, $58,000. To find this target, we take the entire length of that initial flagpole and project it downwards from the point of the breakout. This is standard institutional grade technical analysis. The reason we haven't seen a massive bounce yet is because the market is still seeking that 58K liquidity pocket. This is where the order blocks are sitting, and this is where the bears intend to finish their business. Let's make this a learning moment for the 3,000 people watching us live. Why is the bearish flag so lethal? Because it builds false hope. Every time the price touched the bottom of this channel and bounced, retail traders jumped in with long positions. They built up a huge pile of long liquidation data right below the flag. When the price finally snapped, it didn't just drop, it cascaded. It hit everyone's stop losses, which fueled the move toward our $63,000 target. Now we are in the expansion phase of this breakdown. I'm looking at the live chat. Some of you are asking, can we reclaim the flag? Honestly, highly unlikely. For this bearish flag to be invalidated, we would need a massive, high-volume daily close back inside the channel, which would be around $72,000 right now. Until then, the path of least resistance is down. We are heading to $58,000 to complete the measured move of this flagpole. Before we wrap up this massive session, I want everyone to take a second and type strategy in the chat. Look, trading isn't a game of clicking buttons every 5 minutes or chasing green candles because of FOMO. Trading is about discipline. It's about having the ice-cold patience to wait for your targets to be hit. At the Block Analyst, we don't guess, we execute. We called the $115,000 exit when the world was euphoric. We called the breakdown of the bearish flag. We nailed the $63,000 target to the absolute dollar. And right now, we are standing our ground, waiting for that $58,000 level to complete the measured move of this flagpole. If the market gives us a gift, we take it. If it tests our patience, we stay disciplined. I want to thank the thousands of you who tuned in today. If you appreciate this kind of deep dive, no-nonsense technical analysis, and you want to stay ahead of the whales, make sure you've smashed that like button and subscribed to the channel. Let's show the YouTube algorithm that this community is the most educated, most prepared, and most professional in the entire crypto space. Keep your eyes on the 58K zone, manage your risk, and never trade with money you can't afford to lose. I'll be back live the moment we see a major shift or when target 2 is hit. This has been the Block Analyst. Stay sharp, stay patient, and I will see you all in the next update. Peace.